The merger between Credit Suisse and UBS creates the world's largest private client fund manager. One can think about the merger, whatever one may, whether it was necessary to force it through, whether the Swiss and the Swiss National Bank could have just saved Credit Suisse as a standalone unit, like they did save UBS in 2008. This is by the by. Basically, the merger has been decided and will go ahead as planned. Now, what does that mean for any of the clients of these two monster fund managers? It is inevitable that there will be some job losses. So some of the client relationship managers will be laid off, and some of you, if you're a client of UBS or Credit Suisse, will be allocated a new advisor, relationship manager, or whatever they are called. Now, it is important that you are aware that if you are a client of these two banks or any large fund manager that deals with private clients, you are not necessarily getting the performance that is promised in sales presentations or in the public relations brochures. Because let me explain. If you are a client of UBS, you are one of tens of thousands, maybe hundreds of thousands, especially in the United States, where the private asset managers are called financial advisors as well. You have an army of relationship managers. Now, do you expect that they all provide the same performance? The performance that is elaborated in the investment strategy departments of UBS or Credit Suisse or any other large private client manager. Don't rely on it, because it is nearly impossible from a practical point of view to apply the same strategy to all clients. Of course, different clients have different requirements, but in my honest opinion, I would say the priority for every private client should be to obtain the best possible performance for his assets, whether they are denominated in dollars, pound sterling, euros, yen. It doesn't matter, because you can all work out the performance comparison on a comparable benchmark by adjusting the currency and looking at the performance in one of these currencies and compare them. Why is it impossible that every client gets the same performance that's promised in glossy brochures? Well, that would mean that if, for example, the strategy team decides to allocate more money to emerging market equities, a huge amount of money would have to be moved, given that the combined assets under management are in the thousands of billions. That would mean that even a shift of 1% would mean that maybe 20, 30, 40 billion have to be shifted from one asset to the other. That would just not be a practical proposition, as this move alone would move markets against the investors. That means by the time the last billion has been shifted into emerging market equities, the price would probably already have gone up by several percentage points at the minimum. So be aware that being a client of a very large private fund manager is a bit difficult proposition from a practical point of view, and you also need to consider very carefully what strategy the individual relationship manager is bound by. Maybe he's just a fast-talking, smooth-talking salesman who invites you out for a nice lunch when you do your annual or quarterly performance review, but he doesn't really have any role in the actual investment decisions that are made for you. So private asset advisory, private banking advisory can help you to decide how to communicate and how to relate to your bank, your fund manager, your private bank, and manage the relationship so that you get the best possible performance, not some other clients that get to cherry pick asset decisions, and you are basically left in a stale investment portfolio that doesn't go anywhere. So I hope you find this interesting. Let me remind you that private banking advisory is not giving specific investment advice. That means we are not able or regulated to tell you which bond, which equities, which investment funds to buy, but we can give you advice on how to manage the performance of your portfolio in your relationship with the fund managers. We also can help you monitor the costs that are associated with management of your portfolio. And we also give you advice about risk management. Risk management is particularly important in this day and age, as we have seen in the recent market convulsions in January, February. It is more important to make sure that your portfolio doesn't lose too much rather than trying to shoot for the stars. Our next regular weekly update will be on Friday. So if you enjoyed this video, please hit the like button and please subscribe so that the message gets spread out to a wider audience. Thank you very much for your attention.